Welcome to Sinomania for the week of March 23, 2007. The China Challenge moves to high tech and may have you rethinking long positions in companies like Boeing and Intel. IPO news: the China pipeline remains busy with new issues in banking, telecom, and property. And look for part 2 of this show, a special focus on the strategic shift revealed in this year's National People's Congress. In July 2009, Shandong Airlines will take delivery of the first of many 90 to 100 seat commercial jetliners made in China called ARJ21700. The ARJ21700 airplane is the result of years of collaboration with numerous foreign partners, including General Electric, Rockwell Collins, and Embraer of Brazil. Commercial aircraft like the ARJ-21 are considered regional aircraft and don't compete with the big planes manufactured only by two companies in the world, Boeing and Airbus. China's aeronautical industry is large and spread across the country with two dominant players, China Aviation Industry Corporation, or AVIC 1, and AVIC 2. Chinese companies supply parts, including whole sections, for Boeing and Airbus planes. China began producing American-designed jets as far back as 1985 when McDonnell Douglas MD-82s rolled off an assembly line in Shanghai. Soon, a factory to build entire Airbus A320s will open outside Tianjin. A few weeks ago, Chinese aviation companies proposed to the State Council, the governing body of China's political system, state support for an ambitious project to domestically produce big commercial jet planes to satisfy the giant needs of China's airlines. The project has been given the go-ahead, and up to 60 billion yuan in seed money. If successful, Chinese airplanes could compete directly with Boeing and Airbus and turn the aviation industry on its head. The Chinese are not expecting production until 2020 at the very earliest, but the implications are big, as Chinese purchases of Boeing and Airbus planes has kept both companies aloft more than once over the past few years. Meanwhile, Intel is not commenting on the recent approval by China's powerful National Development and Reform Commission for Intel to build a multi-billion-dollar chip plant in the northeastern coastal city of Dalian. This facility would make state-of-the-art chips and has some semiconductor makers very nervous. Perhaps in response to Intel's plans, the government of Taiwan has lifted its restrictions and will allow the world's biggest chip maker, Taiwan Semiconductor, to use its highest technology for a new wafer plant in Shanghai. Add these developments to the growing sophistication of Chinese automakers and the major advances being made in China with stem cell, biotechnology, and nanotechnology, and you can see that the challenge from China soon may be not just in low-end manufacturers, but in the high-tech and high-price products dominated today by the most advanced economies in the world. New listings. CITIC 1616 Holdings, a unit of Hong Kong-listed CITIC Pacific, is to be spun off in a listing set for the first week of April. Pricing will be announced next week, and the IPO is expected to raise up to $270 million and already has 4 key investors, including Singapore's government investment arm. CITIC 1616 is a telecom hub operator for international voice and data calls between China and Hong Kong and 50 other countries. More banking IPOs in the works. Jiangsu Bank, recently created from the merger of 10 small commercial city banks in Jiangsu Province, north of Shanghai, is looking for partners in planning a listing for domestic and overseas markets. There are no further details at this time, but the bank, controlled now at the provincial level, is talking to investors in Hong Kong. A bigger bank IPO in the offing is China CITIC Bank. The 7th largest lender in China is planning a Hong Kong and Shanghai joint listing that may raise up to $3 billion. A meeting is set for this week in Hong Kong. Another property play, Country Garden Group, a resort residential developer in fast-moving Guangdong province, will stage an international road show very soon with an IPO as early as mid-April. And New China Life Insurance has delayed its IPO to at least 2009. Beijing-based New China Life is China's 4th largest insurance carrier and was expected to raise up to $1 billion in a domestic and Hong Kong listing, but the company is being reorganized and there is an investigation of tax evasion. The Shanghai Securities Exchange may increase its trading band and allow individual stocks of locally listed companies to rise and fall up to 20% with an unlimited number of trades per day. Currently, no stock can go further than 10% on one trade per stock per day. Ultimately, the Shanghai markets looks to use a circuit breaker type system, similar to other world exchanges. There are a number of new changes being floated, including developing derivatives products and introducing market makers or specialists for poorly performing stocks. As always, keep your eye on Shanghai. Make sure to see part 2 of this week's show for a special report on this year's legislative session of the National People's Congress. Remember, investment decisions are up to the viewer. I'll see you next week.